Ladies and gentlemen, good evening, and thank you very much for joining today's session. Today's American Hellenic Chamber of Commerce event on circular economy, and this panel specifically relates to green finance. My name is Dimitris Sakipis, and I am the head of PwC Greece ESG, Sustainability and Climate Change Services. Green and in general, let me say, ESG financing is one of the key parameters that drive sustainable growth. ESG, which stands for the acronym Environmental, Social, and Governance Factors, is rising in prominence for many reasons. Due to changes in public sentiment, values and behavior, impact on financial value, of course, regulatory requirements, climate change risks, and increasing opportunities in sustainable investing. In this complex and dynamic ESG environment, and as we say many times, multidimensional also ESG environment, financial market participants are called to adjust and transform both their financial products and services, as well as their internal operations. Today, we will discuss with our distinguished guests how this green or ESG transition will affect the financial institutions, but their own clients as well. But let me take no more time from our distinguished guests and introduce them to you. We have today with us Ms. Theodora Antonakaki, Climate and Sustainability Advisor from Bank of Greece. Dora, good evening and welcome.
Thank you, Dimitris. Nice to be with you today.
We have Dr. Alistair Clark. Alistair is Managing Director for Environment and Sustainability Department for the European Bank for Reconstruction and Development. Alistair, welcome.
Thank you very much, and good evening, and thank you for having me.
We have Mr. Andrea Pinna, Senior Climate Advisor for the European Investment Bank. Andrea, welcome.
Good afternoon. Thank you for your invitation.
We have Ms. Ioanna, Director of Corporate Governance and Corporate Social Responsibility for National Bank of Greece. Ioanna, good evening. Nice having you.
Good evening. Thank you. It's a pleasure to be here. Thank you for the invitation and congratulations to AmCham for the conference.
And of course, we have Mr. Thanos Vlachopoulos, General Manager for Corporate and Investment Banking for Piraeus Bank. Thanos, good evening.
Thank you, Dimitris. Thank you to all of you. Thanks for the invitation.
Dora, I want to start with you and ask you a very specific question. In my intro, I said that green financing or ESG financing is a multi-dimensional and complex ecosystem. And one of these dimensions is the regulatory aspect. Can you please explain to us what is the landscape and what are the most critical ESG or climate change related regulatory requirements? And what is the role that Bank of Greece has with regards to those regulations?
Thank you, Dimitri. We talk about sustainability. It's a hot topic for everyone. And of course, there are regulation, metrics, data, and of course, disclosure is very important if we are able and if we are to succeed in making our future more sustainable. Now, to that respect, central banks, of course, recognize the importance of regulation and disclosure, and also the importance of climate policies, and how everyone can support an alignment with the net zero goals, moving and transitioning to a carbon neutral economy. This is a way of minimizing risks of environmental risks and climate change risks, and making our economies more stable, more resilient, and also the financial system. And of course, at the same time, this kind of regulation and disclosure will also help in everyone, businesses, supporting and ensuring that everyone is in line and the activities are coherent with our country's climate neutral policies. Now, central banks and regulators have already are already trying to support this transition. We have formed a network, the NGFS, which is a network for greening the financial system. This network is a coalition of the willing, if you like. It's not mandatory, but this network has done extremely a lot of work in supporting and helping the greening of the financial system. We are publishing reports and recommendations and guidance for both central banks and regulators, for example, insurance companies, regulators as well, and guidance on how to better support this green transition and how to support the policies, the fiscal policies and government policies in that respect. At the NGFS, we're also looking beyond climate, so the whole of the E part of the ESG, progressively looking at environmental issues like biodiversity. And lately, we set up a dedicated work stream on data, the work stream which is called Bridging the Data Gaps, because we have seen that we have a lack of data, of good quality, granular data with consistency that can help overall compliance. Now, for this report, which was published, this workstream published a report. I think it was last week, just a few days ago, with an outreach to a variety of international organizations and other stakeholders, a survey, workshops with both banks and firms. But at this time, given the time constraints and of course the magnitude of climate-related risks, we focused only on climate data. So the broader environmental scope and environmental data issues will be addressed hopefully in the future. For example, data related to biodiversity and biodiversity loss. Biodiversity is a very hot topic for this year because we have a lot of conventions focusing on the issue of biodiversity. We have the post-2020 framework for biodiversity as well. So you would expect a lot of advancement there. So yes, we need reliable and comparable climate and environmental related data for the financial sector and the stakeholders. This will help us assess the financial stability and the risks, and of course, properly price and manage those risks. Apart from risks, climate change, of course, is an opportunity. And we expect that this will also reveal many opportunities that would arise from the transition to a carbon neutral economy. Of course, alongside the disclosure, regulation, and data, we need a mix of policy that will help us advance the disclosure and advance the standards and methodologies, potentially certification labels.
Very interesting. I mean, especially the biodiversity aspect was really interesting. And you know, all your regulatory related analysis with focus on climate risks is really important. But Alistair, and I come to you now. Apart from the regulation, is how we see green or ESG criteria integrated. And banks are called now to integrate ESG criteria, including, of course, regulatory aspects such as the EU taxonomy, into their lending and financing activities, set sustainability performance targets with their client, and, of course, establish monitoring processes. Please explain to us what are the key steps that ensure successful integration of green or ESG factors in financing arrangements?
Well, maybe I can just start from the outlook of a multilateral development bank, where we actually are not mandated to sort of necessarily make profit, but we're actually mandated by our shareholders, you know, to achieve something. And what we're trying to achieve is essentially what's called transition. And of transition, we have 6 qualities of transition. And one of the most important ones that really drives our business is the green. criteria that we apply to every single project. So when we get a project into our portfolio, into our pipeline, what we're actually doing is then sort of saying, okay, well, how can we make this a green project that will meet our criteria for lending? So I think, going back to your question, you really need to actually sort of work out what your purpose is. If your purpose is to do good, like we are trying to do, or like EIB and the others, then it's easy for us. But if you're a commercial entity, you want to actually see whether you're going to get a better return. And we would always argue that a well-run company that we might invest in with sound ESG credentials tends to be a good client, a good sponsor that we want to work with, a good party. So we're fully supportive of actually promoting ESG criteria in our clients. When you look at an MDB, what we're trying to do is to leverage change through the application of finance. So we will actually apply conditionality to our loans. And if we're, for instance, lending to a financial intermediary, say in Greece, for example, we would actually then say, okay, well, we want you to follow our performance requirements, our very strict standards for a financial intermediary. But we also might want you to actually, maybe even incentivize you to actually promote green projects. So there's a combination of public money that we can apply into the financial sector, which we think can actually really leverage change. And we've seen the change within ourselves. In my time at EBRD, we've moved from maybe 5% on a pure green portfolio basis to about 40% now, with the aim of being over 50% of our annual business volume being green. Now, therein lies a question which I'm sure we will debate is what is green?
Correct.
And there are various helping sort of criteria that we can now use, such as the EU taxonomy, but it's not the only one. So we have climate finance, which the multilaterals have really promoted. We have capital market issues that were promoted by ICMA, the green bond principles. So I think there are a whole range of financial instruments now coming into play, which were created by the MDBs. I think it was EIB who created the first green bond, but that through the action of the MDBs, that has now become a really growing part of the capital market scenery around the world. But we have lots of initiatives. We've got EU taxonomy, we've got PRI, we've got GRI, green bond principles, TCFD, sorry for all the acronyms, SASB. We really need some form of harmonization, not on a European basis, but probably on a global basis as well. It really is changing everything. It's changing how we raise money through the bonds for ourselves, how we will invest in green bonds, some new products, and we've invested in the first Greek bonds, in green bonds in Greece. And I always go back to, what we're in business to do. The MDBs have, just in the terms of climate, we've invested approximately 50 billion over the last few years on climate-related projects. Sounds like a lot of money. It's a drop in the ocean. It's $1 trillion or many $1 trillion problem that we're dealing with. And we can't do it on our own. And we really need the private sector. I was actually quite touched by the PwC promo that came on before we spoke, because it really said it all. It said, you need to engage with the private sector, which is why AmCham's, workshop that you're holding is so important. And I think Greece has a great part to play, a leadership role in Europe. You're actually pretty well advanced from what I can see from my perspective.
Yeah. You said one key question, what is green? I noted this down. And whatever is green, it's also driving the green economy. So this brings my next question to you, Andrea. We understand that relevant investments incorporating green or even ESG factors will drive sustainable growth, promote green transition, and of course, the green economy in Greece. How can EIB support the development and implementation of Greece's green economy?
Thank you, Dimitris. Yes, let me just, Alistair Clark, start a little bit from the sort of international financial institution perspective. We are indeed, as European Investment Bank, as EU Bank, a pioneer in green financing. And we do play a key role in mobilizing public and private green investment at scale in the European Union and worldwide. Just to give you an example, last year, out of a total 66 billion euros of EIB loans, 26 billions were for green investments. Other example, also like EBRD, we've set for ourselves the goal of dedicating 50% of total annual financing to green financing by 2030. World's first and largest green bond emitter, again, as Alistair Clark said. The thing is that the pandemic has brought into focus many of the vulnerabilities in our systems and institutions. And the true recovery from COVID-19 cannot and should not be about putting things back together the way they were. Imagine that today, despite all the progress made in renewable energy, still 40% of electricity in the world is generated by coal, and much more electricity is needed by the world, as we know. In Greece, we know there is still a great dependence on coal and lignite power plants, but I think it is extremely laudable that Greece has decided now to discontinue all lignite power generation by 2028. And if I understand correctly, PPC has announced the closure of almost all its lignite units by already 2023. In our estimation, Dimitris, achieving the goals that Greece has set for itself in its national energy and climate plan will require about 44 billion euros of investments until 2030. And we must invest the resources of the recovery fund, right, so we can achieve the goal of the European Union to reach climate neutrality by 2050. You mentioned the recovery fund. Out of an overall 750 billion euros, which I understand is the recovery fund package, more or less, approximately 32 billions will go to Greece. Out of these 32 billions, 19 will be grant and 13 will be loans. As EIB, we have an important role to play in helping Greece invest this money wisely, as we will support the allocation of up to 5 billion euros from the 13 billion euros recovery fund loan amount. But how does that help Greece? Well, an important advantage of this arrangement is that it affords a lot of simplification, as it provides a one-stop shop where EIB financing and recovery fund financing will be confirmed into essentially one eligibility process only. Another is the reduced cost of funding, because the blended rate of the combined EIB loans and the recovery fund financing is expected to be quite attractive. But perhaps before sort of giving the floor to the other panelists, I want to mention that in other European countries, we have, as you know, but also in Greece, helped very much developing new technologies. And recently, I was attending a panel on offshore wind. And it turns out that offshore wind, if the EU targets will be achieved, will be the largest source of generation in the European Union in the next 20 or 25 years. And there is an emerging technology, which is floating wind turbines, which may be of particular interest to the Mediterranean countries and Greece in particular, because Greece lacks the large offshore, shallow coastal areas that are necessary for fixed bottom offshore wind. And we are financing this technology now on a sort of a pioneeristic way in the north, but we will be able to support the installation of this technology also in Greece. Perhaps I'll stop here and then I'm happy to.
Thank you, Andrea.
Thank you.
Indeed, when it comes to offshore renewable energy sources, I mean, we are one of the countries that accommodate this really easily. Ioanna, until now, we discussed a lot about the regulatory environment, about green or ESG financing, but all this complex ecosystem also affects the way that banks operate.
I would like, if I can, to give a brief overview of the complexity of the ESG landscape. I mean, from the one side...
And if you could also give us, what are the challenges that you, as banks, face in order to incorporate the relevant requirements into your operation. Sorry, apologies for that.
Sorry, it's okay. It's okay. The thing is that exactly this complexity has challenges and has challenges in order to implement that. So we have, on the other hand, all the stakeholders, the various stakeholders, like investors, consumers, customers, governments, all the market participants, let's say, even our shareholder, that they ask and they are focused on issues like the impact of our company to society and to environment, the expertise on ESG issues at the board level, what we do for social issues, especially after COVID-19, like, let's say, health and safety, the inclusion, diversity, or equal opportunities, equal pay, etc. Sustainable green products are interesting for sustainable green products, and they want information about that. They are interested on transparency, ethical supply chain, and all these issues. The list is not is extended. There is no limit in this list. On the other hand, we have the regulators. We have a lot of regulation already issued and is on the pipeline, more regulation to be published. Recently, just to refer, for the regulation, I could say something. There are good news and bad news. Good news is that the regulators address some of the issues, some of the expectations of the stakeholders. Bad news is all the burden that we have in order to implement and to comply with this regulation. Just to refer to the recent ECB guide on climate-related and environmental risks, ECB has expectations regarding 13 areas. We are speaking about business environment, business strategy, management body, risk appetite, organizational structure, reporting, disclosures, and all the risk management framework and the management of all the risks. Also stress testing and scenario analysis. What means that for the banks and for the financial institutions in general? We have a lot of changes in our policies, in our systems, IT systems, in our governance structure, how we operate, how we communicate with the customers, what we will ask from now on from the customers. A lot of burden. But the challenge here is how effectively and how efficiently you can do the changes. Our bank has decided to do all these changes to incorporate this in our transformation program. We think that this is something that should be in a holistic way. All this, I refer only to one legislation. There are many more. So you have to do, all these changes affect all the organizations. So you have to do something quick and efficient. Okay, we have a lot of legislation on the pipeline, but gradually we have to respond to this. I can see some two elements, other two elements that are of great challenge for us. The one is the issue, it was referred to before, of ESG data. There is a lot of ESG data, always relevant or coherent or reliable, and we need this data and for our customers in order to evaluate them, but also the market participants need this data in order to know how to invest and if they invest to a sustainable company. And we have also the problem with ESG raters because there the environment is not regulated and we have different approaches, different methodologies, and the raters are based on this data. Maybe the new directive regarding corporate responsible, corporate sustainability reporting will solve all these issues. Although there are many requests, requests on this directive. And the third and most serious problem also is is how we handle that with our customers, the awareness of our customers and how we support them in their transition to a different economy, a circular economy, with less carbon emissions and with less dependence on natural resources. These three elements, I think, are the most at the time. Of course, there are many, but the time is, I think, if we have time, we could discuss for hours regarding these issues.
Yeah, indeed. Thank you, Ioanna. And you talked about customers, but also the whole ecosystem. This brings gives me a start to go to my next question for Thanos. Thanos, we notice an ever-increasing focus on ESG matters with the customers, the employees, the shareholders, increasingly demanding that companies invest in green or sustainable practices. In that context, what are your bank, Piraeus Bank, strategic targets for green and ESG financing? And do you feel that this whole ESG thing is a trend, or is it something that is here to stay?
Thank you, Dimitris, for the question. And I think the simple answer is yes. And especially if we consider that we are coming after 2 challenging years, one of the key clear messages that emerged is that environmental, social, and governance concerns are here to stay. And what we have seen is that sustainability is on the top of the CEO's agenda globally, not only for banks, but also for corporates and investors. Now, in Piraeus Bank, we had acknowledged the important role of the economic and social development early on, since 2004, and I would say before ESG becoming everybody's darling. Now, the bank, apart from financing renewable energy sources, and to give you a number, Piraeus Bank is the top financier in the renewable energy sources front, with financing of 28% of installed capacity of the countries so far. We have been the pioneer in a series of initiatives under the perspective that sustainability is not only financing green energy projects. As I said earlier, the journey started back in 2004, when for the first time in Greece, a bank published the environmental policy, something that was approved by the bank's BOD. There was a long journey, and coming now to the most recent year, I would like to mention a few milestones. First, 2017, the bank launched a ESMS system, actually as part of the loan valuation. And this is a system that evaluates environmental and social risks. In 2019, Piraeus Bank, along with other 29 international banks, participated in the formulation of the principles of responsible banking under the United Nations initiative, where in 2020, we were the lead advisor on the first green listed bond that was issued by Terna Energy. And in that year, we first covered the first sustainability-linked loan. I would like to make a special reference here, because so far we have financed 3 sustainability-linked loans. And actually, this was the outcome when we were asking ourselves how we can give an incentive to our customers to proceed with some ESG, let's say, initiatives. And one of these 3 sustainability-linked loans were under the context of the circular economy, and actually transforming a production line, a big production line, from a plastic to a paper. So, you know, we were very proud of this. Now, going forward, our bank focuses on a few near and midterm targets. I would mention only 3. The first one, we are increasing our risk appetite to renewable energy financing by 2 billion euros. On the agri sector, we plan to earmark 1 billion euro to support farmers on the organic farming and water and the agri-waste management. And on the green transportation, we will increase our financing by 1 billion euros. And what we mean by green transportation, not only public transportation, but also e-charging infrastructure and networks, e-vehicles, and etc. Now, if you ask me what are the next steps that banks should take, I think the most important is how we're working as banks on the most challenging goal, which is to build awareness and educate our customers under the ESG framework. And what we have to do is actually guide, advise, and also pave the way to our customers to this transition. Yeah. Let me close by saying that in Piraeus Bank, we are committed to responsible banking. We believe that sustainable financing is about investing in progress, investing in environment, investing in the economy. It's about recognizing that companies should contribute to the world's most biggest challenges, as climate change and loss of diversity. Correct. Finally, I think that we should all seek ways to adapt in a more sustainable way of doing business. Thank you. I hope that
it is critical.
within the time.
Of course, and it was really good that you explained as a timeline your sustainability story. But Andrea, I'll now ask you the next question, because we're talking about green financing, and we want to know more about specific projects. So what type of projects are eligible for funding by the EIB? And what are the barriers that Greece should overcome in order to facilitate development and implementation of a circular economy? That is also the main topic of today's event.
Thank you, Dimitris. Perhaps I'll start by saying that because Mr. Vlachopoulos mentioned EV charging station and the financing of that. And I want to say that, and that partially also I think is in answering to your question, that the European Union and the EIB have a joint program, which is called Joint Assistance Program to support the project, perhaps known with its JASPERS acronym. And one of the examples of the work done by JASPERS, which is essentially a technical assistance and capacity building program, is to help Greece develop and implement a national investment in electric vehicles infrastructure, which is necessary to achieve the targets that Greece has of 330,000 private EVs by the year 2030. Another thing that I think it's important to mention in terms of what the EIB can do, just beyond the sort of attractive long-term loans. For instance, we're working with the steering committee of the Just Transition Development Program to promote alternative growth strategies and opportunities that facilitate a sustainable transition of Greece out of coal. Because as we know, there's a cost, right? There's a social cost to the transition, and that is why Europe always talks also about a just transition out of fossil fuels, and that's important. So we're also working in that area. But you mentioned circular economy, and I just want to say that every year in the European Union, there's 2.3 billion tons of waste generated. And we still, each and every European Union citizens generates half a ton of waste every year. And it has been calculated that if we apply circular economy strategies, we could actually generate 1 to 4% economic growth over a 10-year period, which obviously in this, particularly in this situation, in this moment, is certainly not negligible. And has been calculated also that circular economy could create up to 2 million new jobs by 2030 in the European Union only. Circular economy is very high in the policy agenda of the European Union. In 2018, the Commission published the Circular Economy Package, which mandates recycling to reach 55% of all waste by 2025, growing to 65% of all waste needing to be recycled by 2035. In addition to that, by 2035, a maximum of 10% only of all waste generated may be disposed in landfills. As you can imagine, these are ambitious targets, which will require important investments. And according to our internal EIB estimates, that in Greece, the volume of investments required to sort of achieve a decent level of circular economy is in the order of 5 billion euros. Now, there are a number of barriers that, as we know, are present in Greece, as in other countries. For instance, there's insufficient separate collection of recyclables, insufficient involvement of the packaging industries. Some of the industries are still not paying the full cost of waste treatment. And there are also a question of unclear competencies between state and regional authorities, right?
Correct, yeah.
I have seen that in the recovery plan of Greece, there are a number of measures that are taken or they're proposed to be taken by Greece to overcome these barriers. But again, I want to mention that, for instance, this JASPERS program that I just mentioned, we're now involved in 4 quite large waste management projects in Greece: Peloponnese, Attica, Saronic Islands, and Central Macedonia. Collectively, the estimated waste treatment capacity of these 4 plants is over 1 million tons per year. Now, the key is that of this 1 million tons per year, 200,000 will be pre-sorted bio-waste. And pre-sorting is absolutely key, because it is important to be aware that in the period going forward, the next 6 years, in fact, the grants from the European Commission will not be available anymore for waste management facilities receiving mixed waste. In other words, you can only get grants if you are a waste management facility that receives your waste collected separately.
Indeed, and it's definitely a really big footprint. The whole circular economy is really interesting, as well as other green-related financings. And this brings me to my next question for you, Ioanna. In order for you to finance green transition or make ESG financing, you need to attract funds. So you need to issue sustainable bonds, green bonds. How can banks actually ensure funding in order to drive sustainable growth?
Yes, thank you, Dimitris. It goes without saying that in order to achieve this journey towards sustainability, it's necessary to mobilizing the public and the private sector all together. So, in this respect, NBG proceeded to the placement of the issuance of a green bond. It was the first green senior bond in the Greek market, totaling of 500 million. That was in October 2020. What we have done, the purpose is to express our commitment to support the transition to a green economy. What we have done is that we develop a green bond framework. That framework is in accordance with the ICMA green bond principles, because in EU, the standard regarding green bond is, we have the proposal, but we have something it's not finalized. And then we have received an external party verification regarding this framework. Then we have to monitoring, to reporting on an annual basis about the allocation of the proceeds and about the impact of this bond. We are very happy that EBRD participates in this bond. I think that signals that it is truly for the growth and for the green economy. And it is the basis that this framework, based on this framework, we could explore in the future other possibilities for develop a framework regarding a sustainable bond or even a social bond. What we have done also is that we contractually committed to channeling 100% of the proceeds that will be raised from the sale of the bond to financing projects related to renewable energy sector. Furthermore, during the discussion with ESG investors, we heard their needs, their expectations, and we changed a little bit the characteristics. What I mean, we shortening the look back period to 2 years, for the refinancing, and we improving the split between new and refinancing to 50%. should be noted that we have already high shares, 40% in the Greek renewable energy market. We expect to strengthen further this market share. We have the target of financing 3 billion over the next 3 years to renewable energy. And if I may say, because I'm proud for that, we are a bank with a long-term history from 1841, and all these years we always supported sustainable projects, although maybe the term does not exist at that time. So we will continue this strategy, and we will continue to support and to encourage the market participants to invest in products that promote green economy, promote sustainability, promote circular economy, and whatever. We think this is the only way, this is the key role that the banks have, the financial institutions have to play in order to achieve EU. It's okay, it is a little bit ambitious, but it could be an ambitious target to be the first neutral continent until 2050.
It's always nice having ambitious targets. This drives sustainable growth after all, right? Thank you very much, Ioanna. And Thanos, we're talking about financing, and of course, both Alistair and Andrea before referred to the Greek Resilience and Recovery Fund, and we cannot leave this topic without commenting it. So we have the Greek government who's placing a significant focus on the Recovery and Resilience Fund, and its effective implementation to steer the country towards a more green or ESG economic model. What do you think will be the role of the Greek banking system and Piraeus Bank specific in channeling and leveraging RRF funds? And do you think that investments in green projects are enough for Greece's transition to a sustainable future?
Thank you, Dimitri. I honestly believe that we have, as a country, a historic opportunity to transform, to shift our economic model by exploiting the amount that will come from the RRF. Just to remind ourselves, we are talking about 32 billion euros, and if we adapt the private funds and the leveraging opportunities, then we are coming to almost 15 billion euros of inflows in the country the next 5 years. And as Andrea mentioned earlier, is not only the amount that will be the inflow in the country, it's also the blended pricing, which will be very competitive. And it is important to mention here that one of the key elements of the Greek competitiveness is that usually we have a more increased pricing if we compare this pricing in the loans, if we compare this pricing to the average of the rest of the Europe. Now, regarding your questions, yes, your point is absolutely correct. Green project has an increased focus the last period, and especially the green transition. But let's ask ourselves: is it enough that for the reconstruction of our country's economic model, just financing green energy projects? Definitely not, in my opinion. That is why the scope of the Resilience and Recovery Fund goes beyond the green transition. The scope of the RRF also includes the digital transformation, also includes the economic and social resilience, modernization of the agricultural production, extroversion, and of course, social resilience by creating new jobs, let's say. But in my experience, what I believe is that we have to be very cautious about the expectations from the opportunity of the RRF. And I'm referring to the number of conditions that we have to achieve in order to have the maximum utilization. I would mention 4 conditions that I think that are critical. First one, projects. Which projects we are going to select in order to fund, in order to have the maximum value added for the economy, but the society also, and also to have the maximum or a significant multiplier for the economy. Secondly, time. The timely absorption of the funds and how mature are these projects is of major importance. 3, readiness. And I'm referring the degree of response of all stakeholders, and more specifically to the Greek government, public administration, business community, and of course private funds. And the last, but the mostly important, I think, the leverage. Are banks ready to grab this opportunity and make the leverage financing for the RRF? I think in that context, Greek banks are ready, and I think they are going to play a crucial role, especially in Piraeus Bank, as the largest underwriter the last years in the local economy. We're committed to facilitate the full utilization of the RRF amounts. I would take a minute to say our design so far on the RRF. 5 P's. Our approach is very simple. 5 P's. I'm referring to a PMO, meaning a project management office that will be the single point of contact, coordinating and mobilizing all the necessary resources internally and externally. Second P is people, our experts that will offer the technical assistance to our client in order to submit and assess their business plan. 3, products. We are designing RRF-linked products. 4, processes. We are streamlining our processes in order to optimize not only the time to yes, but also the time to money. And the last one, partnerships. We're discussing to have certain partnerships in order to engage experts in this exercise.
Yeah.
I would like to finish actually by saying that, as Dora said, we see the sustainability challenges not as a risk, but we see it as an opportunity. And we plan to have any financing from now on that is not only, not only to use the risk filter, meaning that not only to finance a company that is not doing harm, but to find projects that are doing actually good on the society.
True. And it is. Let me say, Thanos, it is really interesting that you showed both readiness with regards to RRF grants and loans absorption, and I also kept the 4 conditions: projects, time, readiness, and leverage. It is really critical. But you also mentioned Dora, and Dora, my next question is for you. So we have the Greek Resilience and Recovery Fund that says that more than 37% of total grants and loans will be allocated towards green transition. We know that green transition incorporates climate risks. So climate change risks, including physical and transition risks, have been recognized as one of the most critical risks globally, but for Greece as well. Well, what analytical work does Bank of Greece do? Because you do really interesting things over there in order to understand and quantify those risks.
Thank you, Dimitris. I think the conversation has a very, very interesting turn, and it all seems that we are setting up an interesting but yet familiar puzzle with constraints and challenges. Now we've realized that climate is an important issue for us to study. Back in 2009, or almost 12, 13 years ago, we set up a committee of scientists back then to study the impact of climate change for Greece. And since then, we've been publishing reports. We're an advisor to the Ministry of Environment and Energy. We've published books. We are the first central bank worldwide to endorse the responsible banking principles, and I'm really glad that I'm today with two of our banks that have equally endorsed and signed the principles and are doing progress on it. Unfortunately, those principles do not refer to central banks, but also only to commercial banks. So we are happy to see their progress on those issues. Nowadays, we are also working on the Life IP project, the program, an EU program, a national EU program on the adaptation of the country to the impact of climate change, because resilience is of utmost importance. We need first and foremost to be resilient for the change that is coming. Climate is already happening. Climate change is already happening. Whatever we do as a small country will have minimum impact on mitigating climate change worldwide. So we have to follow, and we will follow, the EU policies, but at the same time, we have to have our own adaptation policies. And for that, we've been an advisor to the Ministry of Environment and Energy. We've been drafting our national adaptation strategy back in 2015. And now we are working on the 8-year project, the Life IP, on adaptivegreece.gr. To implement this strategy and actually write the new strategy from 2026 onwards. Coming back to the RRF story, yes, we have to be ready for it. Readiness is an important factor. And of course, following on the opportunities of climate change, we have to see that as an opportunity as well. It's an opportunity to build back better. It's an opportunity to walk the talk. So we've been talking a lot. Now it's time to work and use this mechanism to really plan and implement all the things that we should aim for in terms of sustainability. It's also an opportunity to enhance financial integration in the European Union through green finance. And of course, it's also an opportunity to also promote the agenda of the Capital Markets Union, because we do believe that there are many advantages there through green finance.
Yeah, thank you very much, Dora. We are a bit stressed with regards to the time left. So, Alistair, unfortunately, I have one more question, just one more question for you. We would like to hear much more things from you. We talked a lot about, sustainable financing, what this means in terms of funding, how this affects the operating models of bank, but we have not yet discussed about clients. What are the challenges, opportunities, and benefits for clients, and especially corporate organizations, and how can we increase awareness for those benefits with regards to green financing?
Well, on the climate side, I think going back to this risks and opportunities, banks are facing a risk in their portfolios already. So the use of mechanisms such as TCFD become really important. And then that link with biodiversity that we said earlier with TNFD just coming down the track perhaps in a couple of years' time. So looking at nature and disclosure of the impacts in the portfolio of climate change. So yeah, climate change, as I said before, it's we've done really well. We've got 50 billion of climate-related investments as the MDB community, but there's nothing. As I said, it's $1 trillion project to control climate change. So how do we make it happen? Well, it's an opportunity for us as well. I would say 3/4 and maybe even a higher percentage of our investments in the green space are actually climate related. And climate, it could be making processes more efficient. So it has that impact on the circular economy as well. So I think, it's an opportunity for businesses. We've all seen the net zero targets. They've been set at a high policy level. We see corporates saying that they're going to achieve it in 2030 or 2025 or whatever. And I think what's really important for us as the NDB community is, as Andrea said, is leadership. And I think the fact that both EIB and EBRD are absolutely committed to align all our portfolio to Paris, to the Paris Accord, is such an important step, because that then says to the rest of the financial industry, you really need to actually make this a mainstream risk, but also a mainstream opportunity for your ongoing sustainability as an institution or as an organisation. And I know you're very stressed on time, so maybe I'll just stop on that note.
Really, big challenges ahead. Okay, ladies and gentlemen, this concludes our panel today. Theodora Antonakaki, Dr. Alistair Clark, Andrea Pinna, Ioanna Sapountzi, Thanos Vlachopoulos. I would like to thank you very much, both on behalf of the American Chamber of Commerce, as well as on behalf of PwC Greece, for joining this panel today. I think it was a really interesting question with regards to green or ESG financing. And I hope that I will see you soon in the near future.